All right, so thanks for joining our webinar today. If you have not been on one of my webinars, my name is Katie Gascoigne. I am one of the outreach coordinators for the Human Services Center Mon Valley. We're located in Turtle Creek, and we are presenting today as part of our financial literacy program and part of our VITA tax program as well. So thanks for joining us. All right, so a few talking points and some of those housekeeping things as we get started. You will get a recording of the webinar, as I stated, and a copy of the slides. So don't feel like you need to frantically write down everything that I am saying right now. That's totally fine. The email that I send later this week will have some follow-up resources that I mentioned throughout the presentation, and there will be a survey in there. So if you answer your survey, you have the chance to win a $25 gift card if you provide contact information for that. And for having attended today, you could also win a second gift card, which is a $50 gift card for having RSVP'd and then actually shown up to our event. If your name on the attendance list is different than the name that you registered with, please either rename yourself. If you hover over yourself in the attendance list, you get a little drop down, you can rename yourself, or please send me a chat with the correct name so I can match you to the attendance list, because I want to give you credit if you signed up for the event. All right, and then looking at our talking points here, I'll go over what VITA is. What are some of those new things for the year? What are some of the COVID benefits that we unfortunately lost for the year? What important documents you need to bring to your tax appointment once you get that scheduled. We'll talk about getting you scheduled for those appointments. And then we'll also have some question time as well. So, all right, what is VITA? So HSC is part of the VITA program in our area, and that stands for the Volunteer Income Tax Assistance Program. So this is an official IRS program. We're not just weird people on the side of the street, like trying to do your taxes just because we love them. Like, it is part of an official program. We're all trained and certified, and we are happy to help you get your tax refunds that you're due. So our volunteers and our staff provide completely free tax preparation, which includes federal, state, and local personal income taxes. So if you have business taxes, I'm sorry, we can't help with that, but we're happy to do your personal income taxes. And then our goal is to help residents get all of the money that they're due without them having to pay for that. So if you've ever had to pay for taxes on your own, you know that can be quite expensive sometimes, a couple $100s, and we're hoping to avoid you having to pay those fees. And part of being a part of this IRS program is our staff and volunteers have to abide by what is considered the Taxpayer Bill of Rights. So this is an official thing from the IRS. The link is here. You can check out the full Taxpayer Bill of Rights, but I'm just going to touch on some of the things that are important for that. So one, being informed. We want you to know what the tax laws are that you need to comply with. Be informed about what we're doing with your information. And if you get any tax forms or letters from the IRS, we can help explain those so you're informed about what information they are looking for. You have the right to quality service. So again, everyone who works with this program is trained. They've all tested to verify that they are trained in what they are doing. You have the right to have respectful and a professional experience with the people that you work with to get your taxes done. You'll be treated with respect when you come to our tax sites. And you should also expect professionalism from the IRS if you need to directly interact with them on anything. Next, you have the right to pay no more than the correct amount of tax. So this includes, we help make sure that everything is entered correctly in the system. You're not charged any extra taxes. You're only paying the required fees. If you would have to pay any fees, there's nothing bogus out there. But with that also is making sure that you get the right amount of your refund that you are due. Next, you have the right to privacy and confidentiality through the program. So your information is handled with privacy. We're not using it for personal gain on our behalf as your tax preparers. We keep your information confidential. And then, like I said, there are more that are in that full taxpayer bill of rights list. So please take a look at that if you want to know the rest of it. All right, so what are our new things for the year? So first, if you're an educator and you submit expenses to get a deduction on your taxes, that amount has increased to $300. If you are married filing jointly and you're both educators, you can actually get up to $600. And these expenses are for things like buying books for your classroom, you bought supplies for your classroom. It even includes personal protective equipment and disinfecting wipes as we've dealt with the pandemic. So those things, if you know that amount and have those receipts, we can help you get that deduction. And this is for K through 12 teachers, counselors, principals, people like that. The next one is business mileage. So if you list mileage on your taxes, there was a change in the very middle of the year, kind of related to the inflation issues we've been having. So you will need to make sure your mileage is broken down from what you drove January through June, because that was considered one amount of reimbursement, and then a second amount July through December, because that was listed as a higher amount. If you don't have a clue how your miles break down specifically, you can do things like anytime you get an oil change, or maybe your car went in for its inspection, if it was around that middle of the year, those companies usually write down mileage on the paperwork that they have given to you. So you can check that and see what is listed there. If you drive for a company like DoorDash or maybe Uber, you could check your trips to see how many miles were the first 6 months of the year versus the last 6 months of the year. This last change about the 1040 line 1 changes, when you actually look at the tax return that's finalized and printed for you, some of the income will be split out on new lines that used to be lumped together previously. It doesn't change how you're taxed on those, but your actual tax form is going to look a little different when you take a peek at it. And then there's one other thing I'm not going to spend too much time on. If you heard last year that there was going to be a change to how the 1099K is processed, that has been postponed. So this was going to be related if you got at least $600 on a 1099K through companies like Uber or Lyft, potentially, if that's how you got paid, but also payment processors like PayPal or Venmo, if you get paid through those things. That has been tabled for now. It's been postponed. We'll talk about it on the webinar next year, but you don't need to worry about that change at this point. All right, so what COVID benefits did we lose? So there are no longer stimulus payments. There weren't any stimulus payments that you got in 2022, so you don't need to worry about listing those on your taxes this year. However, if you need to file a previous year because you didn't file yet, so possibly filing 2020 taxes or 2021 taxes, we do need to know that information. So you would want to make sure, if you got a letter from the government saying what you received, or check your bank statement for how much you received, we'll need to know that information for previous year taxes. And I will say, we really want to know the right number, because if you give us the wrong number, if the IRS thinks it's different from what they sent you, it could hold up how long it takes for you to get your refund as they manually check those things. There is a question. Can I repeat what I said about Cash App and PayPal? So there was potentially going to be a change that if you had received at least $600 in payments through that you might need to report that on taxes. That's not happening for this year. So if you were worried about it, you don't need to worry about that for this year. And that is just if you're paid for like actual business wages or business income through that, or employment income through that. If you're just like, I do this all the time with my roommates, we reimburse each other for different expenses through Venmo, those types of reimbursements don't count because that's not considered income actually. All right, our second change for this year, there is no longer a $300 charitable deduction. So this is something that everyone was eligible for If you made up to $300 in donations, you used to be able to write that off on your taxes. You can't do that this year unless you're going to itemize. So it's going back to what it was pre-COVID. You can write off tax donations if you itemize. Now, most people who come to our sites, it's not a benefit to them to itemize because they'll actually get more of a write-off by taking the standard deduction. But if you have questions about that, we are happy to sit down with you and do that math and help you figure out which is correct or which gets you the best benefit, basically. Next is the government rolled back a lot of the credits for child tax credit, earned income credit, and your child and dependent care credit. And we're going to look at those a little more in depth because this is where you'll probably notice a change to your taxes. All right, so the first for the child tax credit, they rolled back the eligible age for your children. So your child needs to be under age 17 as of December 31st, 22. So this means if they turn 17 at any point, they would no longer be eligible to get you this credit. They also rolled back the amount of money that you can get per child. So it's now a maximum of up to $2,000. And you also now need to have earned income, or you need to have it again. It used to be a rule and it's back. You need to have earned income to get this credit. So last year was a really big year for people getting the child tax credit because some COVID changes meant you didn't need to have earned income. You were getting a heck of a lot more money per kid. You are definitely going to see a change in your refund amount this year compared to what you got last year. It's not that you did anything wrong. It's not that us as your tax preparers did anything wrong. It's just the government changed how much money you're going to get here. So you're probably going to see a much lower refund, and that is the unfortunate situation. The other big credit that a lot of people get who come to our tax site is the earned income tax credit. And again, they rolled back some of the expansions from the pandemic, so they don't exist anymore. So the eligible age changed. You now need to be, and this is like your age in 2022, you now need to be between ages 25 to 65. We had a lot of seniors who were still working last year who were very excited that they got the earned income credit because they took off that maximum age cap, but it is now back in place. So if you're a senior who is still working, I'm sorry, you're probably no longer eligible for this again. And they also changed how much money you can get based on your filing status and things like kids. So this is one of those complicated taxes where like, it depends on your filing status, it depends on how much income you earned, and it depends on how many children you have in your home to tell you what your maximum credit is that you're eligible for. So I don't have a chart for it, but that's okay because it's kind of confusing for most people to look at. But the bottom line you should think about, if you're a filer with no kids like myself, we're likely going to see lower credits compared to previous years. And they lowered the income eligibility, meaning I can't make as much money to still be qualifying to get the credit. And so like the credit dropped from about $1,500 to $500 for people without children. So that again is going to be a big difference if you got this credit in a previous year. If you are a filer with children, though, you might see a higher credit compared to last year because they're providing more money this way now, and your income eligibility is slightly higher. So if you made a little more in 22 compared to 21, you might still qualify for this credit. And then our last credit we're going to look at is the child and dependent care credit. So this is another one. You'll need to have earned income because the point of the credit is to like help pay for child or dependent care credit so you can be working or looking for a job or going to school. And usually you have some income if you're doing those things. And the amount of money you can get for the credit again changed. So it returned to a maximum of $3,000. If you've got one qualifying person, or you can get up to $6,000 if you have two or more qualifying people. And to get this credit, you will usually have a form that was given to you by a child care provider or a dependent care provider that states how much money you paid them during the year, And we use that to list on your taxes to help you get your credit. All right, so looking forward, now that you know some of those changes, how can you get your taxes done for free with us? So to start, to use this VITA service, you have to qualify based on what your income was for 2022. So if you're an individual, it's just you on your tax form, you need to make under $40,000. Or if you're a household, you can make under 60,000. And that household structure can be any number of things. It could be spouses who are filing as married, filing jointly. It could be you with any number of dependents under you, whether they're children or other dependents that you have. You can have up to 60,000 in income there. And again, a reminder, we just do income taxes. We don't do business taxes. So if you've got a bakery that you need to get your business taxes done for the bakery, I can't help you with that, but I can help you with your income taxes instead. All right. So our important documents. And I will also say, there are some situations where you're considered out of scope. That is the language that's used in the program. You are out of scope for the program and we won't be able to help you. There are some types of, you might be out of scope if you're over income, or a type of document that the VITA program is not allowed to handle. So when you call to make your appointment, they'll ask you lots of questions about what type of income you have to make sure you qualify for the program also. Okay, so important documents to bring. Everyone that is going to be listed on the tax return, you need to have a social security card for them. So that might be you, that might be your spouse if you're filing jointly, any of your dependents, we need to see their social card. You need to bring a photo ID for yourself as the main taxpayer and also your spouse if you're doing married filing jointly. And please bring your spouse with you because they also have to sign the tax return. It's a little awkward when we're like, well, we're done, but we can't actually file because your spouse isn't here to sign anything. You will want to bring all of your income document types. So if you have wages from a job, this is usually reported on a W-2. If you have multiple jobs, you'll have multiple W-2s. Bring all of them. That's just fine and dandy. If your income is reported on something else than a W-2, just bring it along. We'll help you figure that out. If you unfortunately didn't work for part of 2022 and you had unemployment income, you will want to make sure you bring the 1099-G that you are given, probably, by the state or by the federal government, whoever paid your unemployment. If you are self-employed, your income might come on a variety of tax forms. So that includes a 1099 NEC for non-employee compensation, a miscellaneous, or a K. And this is any variety of people who are considered self-employed. You might be a contractor, you might do Uber or Lyft or DoorDash, any of those type of delivery type services. So a lot of people get paid on these three types of forms. Bring those forms, will help you figure it out. Along with your self-employment income, you will need to bring your self-employment expenses. So you are required to list self-employment expenses on your taxes. And you usually want to do this because it reduces the amount of tax that you owe. Your expenses might include things like advertising, if you buy supplies for your business or have office expenses, mileage, if you're driving mileage, we talked about that. You'll want to list your mileage at the standard rate. You might have tolls if you got stuck driving on the turnpike somewhere. We can even do sometimes cell phone expenses. So you will want to spend some time before you come to your tax appointment, coming up with a list of what your expenses were, looking at your receipts for that. The email that I send later this week will have an expense tracker in it. That is very helpful if you want to take a look at that before you come to your appointment. Because we're going to make you sit down and do it anyhow at your appointment. So it serves you better to just take a look at that beforehand and consider what your expenses were so we can get those listed on your form. We don't need to see specific receipts for every item that you're claiming. We can do like bulk numbers that we report, but If you would happen to get audited by the IRS, you have to have those receipts that we're listing for you. So I don't need to like necessarily see all of your toll receipts from the turnpike. You could just tell me it was $100 if it was $100, but the IRS is going to want to see those receipts if you happen to get audited. Someone has their hand up. Do you want to come off mute and let me know what your question is?
Hi, my name is Corinne Johnson, and I work patient care, and we have to buy our uniforms. Sometimes you have, our smalls and shirts and stuff like that for our uniforms. So can we deduct that as well?
Yeah.
I know last year they did a bulk, like you can't go over $300 last year, but what is the limit? And I didn't have to have I had my receipts, but he didn't need them because it's cut off at a certain amount. So can you answer that for me?
I don't know the amount off the top of my head, but I can look that up and include it in the follow-up email. But yes, you can include what's considered unreimbursed business expenses, like having to buy a specific uniform or type of shoe for your job. So things like scrubs that you're only, wearing when you're at work, definitely things we can list. If your uniform is khaki pants and a polo shirt, while technically you're required to buy that for your job, that's considered clothing you could still wear out on the street. You may not like to wear khakis, but you could. So that's like khakis in and of themselves aren't deductible, but things like your scrubs and stuff can be. Again, you'll want to come up with your list of how much you spent on that during the year and bring that in, and we can do business expenses or unreimbursed business expenses that way. I'm going to write a note.
How would you do that? Would you list like 5? How would you do that? Would you list like 10 pants or, you know what I mean, at such and such cost? Because during the year, you don't really keep those receipts. And sometimes I've noticed receipts fade.
Yeah, if
So
you
that's why he said,
know,
well, there's a certain amount that he can claim.
if you know you spent like $500 on like uniform pieces that are included in that, we can use that number. But I will always back this up with like, if any of the taxing entities would want to see receipts, you will want to make sure you can produce something that says that. I a lot of the time get emailed receipts to me from a lot of places I shop at. I don't know if you have any of those things. You could dig through your email and see if you have them. And that might be a good note for all of us going forward, like what we need to gather in 2023 for what we're going to file next January for taxes. You might want to make sure we keep receipts like that for going forward. Okay. All right. Those were our self-employment expenses. Other stuff on this screen, your retirement and Social Security. So this might be retirement, pensions, Social Security. They're called different things. It might be on a 1099-R or a 1099 SSA. If you get that, you will want to bring it with you. And then interest and dividends from bank accounts. So sometimes you get this 1099 DIV or INT that is listed. Sometimes you don't get a paper form, but you still need to bring that information with you. I know the account I have at a local credit union never gives me an interest form, but I'm still required to list that interest on my taxes. So what I do is check my monthly statement from December 22. It always has like a total amount of interest you've received. And I use that number for my taxes because I never get an actual form. And that's the thing, you can just verbally tell us what that amount was if you didn't have an official form. All right, let's tab over. Next one are education expenses for tuition and student loans. Tuition, you might have a 1098-T. And then your student loan interest, you might have a 1098-E. And again, this is a thing, you may not have been given a paper form by your school or loan servicer, but what they likely did was send you an email that said, go to this website and download it. You will want to, before your appointment, go to that website and download your form and bring it with you. You can either print it out or we have a way you can email it to us if you don't have access to a printer. This will likely help reduce the amount of taxes that you owe or maybe help increase a refund that you get. So definitely take a look if you got one of those forms. If your student loan is only through the federal government, all of that was on pause and you weren't required to make payments and interest wasn't accruing. So you may not actually have paid any interest last year if all you had was a federal loan. So just want to take a look for that for yourselves. Health insurance, if you received a 1095A, please bring it with you, especially if your insurance is through the marketplace, which is healthcare.gov, or Penny, which is Pennsylvania's specific healthcare marketplace. You're going to get a 1095A and you definitely want to bring that with you. If we file your taxes without that, it will automatically reject from the IRS and you're just going to have to come back anyways with the paperwork. So please make sure you have that. If you're not sure if you got one, you likely have an account wherever it is you got your health insurance from, whether that was healthcare.gov or Penny. You've probably got an account on their website and can pull up that information. You're definitely going to want to bring it because it's just going to reject if the government knows you have it and you didn't bring the paper with you. If you pay for childcare expenses or dependent care expenses, so we talked about this briefly, you'll want to bring the paper from your childcare or dependent care provider that listed how much you paid to them for the year. It will also include their EIN, which is their tax number. And that's all stuff that we just need to enter into the system to help you get your credit. And then bring direct deposit information. I'm going to hope that everyone here gets a refund and doesn't owe taxes. So you will want to get direct deposited if possible. You will get your refund so much faster if you do direct deposit versus a paper check. So to do that, you will need a bank routing number and your account number. Now, this is different than the 16-digit number on your debit card. So some people are just like, here's my thing, and they hand us their debit card. I'm like, I can't do anything with those 16 numbers, I'm sorry. So this is the actual bank account number that is connected to that debit card. You'll want to look that up. Stop by your bank if you're not sure what it is. Like everyone who has PNC has the same PNC routing number likely, so it's just that extra account number that we need. You can also consider, we can deposit your refund into multiple bank accounts. So you could have part of it go into your checking account so you can pay some bills, and we could automatically put some of it into a savings account to help you save some money. And you can also buy a savings bond with your refund. So there's a few different ways that you can get that refund. Some of it might help you save for the future if you would like it. And then on the horrible off chance that anyone owes any taxes, you can also decide if you would like a direct debit from your account. So you can mail a paper check if you want to, but they can also use that bank account number to just directly pull the money from your account if that's easier for you. And you can tell them what day you want that to come out of your account also. And if there's any other tax documents that you got, any envelopes that say this is important for your taxes and I didn't include it on the list, please just bring that to your appointment also, and we'll help you figure out if you need that to be filing. Okay, so we can file multiple years worth of taxes. So what is considered the current year's 2022 will obviously help you file that. If you did not file previous years, we can help you do that as well. So that would be 21, 20, and 2019. So we can help you file all those previous years if you didn't file yet. If you need to file previous years, you would just need to make sure to bring all of the documents that you had from that year. So you might need to do a lot of extra digging if you're going back 2 years to find all of those W-2s. If you need 2020 taxes or 2021 taxes, again, those were years with those stimulus payments. So you need to figure out if you received anything from them yet or not, because we want to just make sure that your return is as accurate as possible as we go. All right, so the fun part, how do you get a tax appointment? So as I mentioned, us at the Human Services Center, we have a VITA site. We are open January 31st through April 12th. So we open next week on Tuesday. We are open every Tuesday and Wednesday throughout that tax season. Our times are on the screen. We've got morning, afternoon, and evening appointments on both of those days. And we're located in Turtle Creek. If Turtle Creek doesn't work for you, if that's not convenient, or you need a different day of the week or a different time, that's okay. We've got lots of partners that I will show you on the next screen, but everything is scheduled the same way, which is what's on this screen. And you'll get this again in your email. If you want to schedule your appointment by calling someone, you will call United Way at 211. You tell them, I want a tax appointment. I want to come to Turtle Creek. They'll help you find what appointment we have open. If you don't have a cell phone and you just have a landline, you may want to instead call this 1-888 number. Sometimes landlines don't connect to 211, but it will still get you to the same place. So if you're writing down, it's 1-888-553-5778. And again, that will be in the email that you get in case you forget that number. You can also go to this website, pa211sw.org. You can go to that website and self-schedule an appointment for you at one of the tax sites. So if you don't want to call someone, or it's like midnight and you're just realizing you want to schedule an appointment, you can go online and do that yourself. So all of that appointment scheduling goes through this same avenue, but you can pick any of the partner sites in the county. You can even do, so all of our tax prep is in person. There are some sites that you can do completely virtual where you'll upload documents into the internet. Someone preps your tax returns, send it to you electronically to sign. That's an option if that works for you. There are also places that are doing drop-off appointments. So you literally drive up, drop off your documents and leave. You don't have to stay there while they are being prepared. So there's hopefully an option that works for you. We would love to see you in Turtle Creek, but I understand we have people attending from all over, so something different might work better for you. So these are all of the site locations in Allegheny County. They're all of these little gold stars. I've got Turtle Creek circled in case you forget where we're at. But it's literally the whole way up the Allegheny River into Natrona Heights, where one of our partners, AVAC, is doing tax prep. We have people all the way over in Moon Township at Robert Morris. There's people in the South Hills. So hopefully there is something that works for you. Again, Turtle Creek is Tuesdays and Wednesdays, but if you need a different day, please make use of one of our partners. All of these sites are all VITA sites, so they all did that same training and certification that we did. You can trust them to properly handle your tax information like we would be. All right, and then a little bit of looking ahead for next year, because we're almost a full month into 2023. So you want to think about how you can get your taxes ready for next year also. So one, Social Security tends to change based on if there is inflation. We all know the last year was a little ridiculous with how prices increased for things. So there might be a change where Social Security goes up. You just want to make note of this. You might want to look for a letter from the Social Security Administration stating if your benefit is going to change. You may want to think and consider if you change any of the tax withholding related to that, or if you're still working or you get other pension or retirement things, you might want to think and consider if you change any of that withholding, if your income is going to be going up. There is a website here and a phone number where you can check for your Social Security Administration statement that would have some of that information. So you can take a look at that and just think what works best for your tax situation going forward. And then we talked a little bit about expenses, what we might want to change and pay attention to for 2023. So if you have self-employment income and you know you didn't track any of your expenses in 22, you're definitely going to want to do that for 23, because again, you're required to list those expenses on your taxes. So you'll have that expense tracker that you get in the email. You can keep one copy to try to think back to what you did for your 2022 income, and then continue going forward in 2023, accurately tracking everything that you're doing on a monthly or weekly basis. And the point of that is it can help reduce the amount of tax that you have to pay to the government, which is always a good thing if you don't have to pay as much in taxes. All right, we're gonna do question time. So I know some other things were popping up into the chat that I couldn't pay attention to as I was going through everything. So I'll pull up some of those. I'm also going to pull up some questions that you all submitted on the registration form when you registered. You don't have to scramble and write this number down. It will still be in your email. If you leave this webinar and you come up with a question later, feel free to call us or text us at this number, or you'll have my email. Shoot me an email. Whether you're contacting me after the webinar or if you say something today in our question time, if you have a very specific situation to yourself or it sounds very complicated, I might tell you to schedule a tax appointment because it will be easier to talk out in person, especially if we can look at your tax forms. So I might just focus on some basic things that we can all talk about. It's not that I'm not wanting to answer you, but it might be easier just to look at specific tax forms that you have. So I'm going to stop my share screen so I can actually see all of you and all of your questions. All right, where is my chat here? If you didn't RSVP, still send me, make sure that I've got your accurate name and maybe an email if you would like to be entered. You can definitely enter to win our follow-up survey, especially if you send me your email right now. I'll add you to that email list. That follow-up survey, just let me know how we did today. Did we answer your questions? Are you still wondering something? And there is still a chance to win a gift card from that survey. There was a question about investments via Cash App. So I don't know exactly what investments you had, but I can say, I know you can buy Bitcoin through Cash App. Our site is not allowed to do taxes if you have any digital assets that were, that you had income off of, which unfortunately includes Bitcoin. So if that is one of the things you're looking at, you might not qualify to come to the site. But when you call United Way at 211 to schedule, they'll ask you those questions to see what type of investment it was to make sure if you can come to us. Someone made a comment every year there's a change. Yes, unfortunately, all of this tax stuff changes on a yearly basis, which is confusing for all of the public. But that's why we try to do this webinar to help give you a heads up about what might be different before you get to your tax appointment and you're surprised by something. I've got a question here. Do you need the actual Social Security card or can you bring a number or picture? If you have a 1099 SSA, so that is a Social Security statement, that can count because it's obviously something directly from the Social Security Administration. If you don't have a card, I would highly recommend you get yourself a new card because a lot of different types of programs are going to require you to have that type of card. So it is just in your benefit to have that going forward. But if you absolutely don't have a card anymore for some reason, we can sometimes take a photo of it. I can't take a Social Security number written on a piece of paper though, that does not count. We also can't just look at, like if you did your taxes somewhere previously and have a printout of your tax return, we can't just take the Social Security number off of that because someone could have entered any number there. So we need to see something that is an official something from the Social Security Administration. All right. I had some questions from our registration form. Someone had a question about their spouse passed away in 2022. Do they still file a joint return? So if anyone else on the call has that situation, I'm so sorry to hear that. If your spouse passed away in 22, yes, it is weird to think about, but you will file a joint return because they were living at some point during the year. You will need to bring a copy of the death certificate with you because you're required to enter some of that information into the system. Obviously, your spouse is not going to sign, but their name is still going to appear on some of that paperwork then. I did have some questions in there from people who are providers. So you work at some of our partner agencies and nonprofits. How can you best assist the people that you work with? Hopefully share with them some of this information that I'm sharing with you today. You're welcome to pass on any of the resources I send to you. You can send them this recording and the slides that you'll get. Please remind them to sign up for an appointment and encourage them to make sure that they bring everything like their documents, because that just helps their appointment also go faster. Someone had a question that they're not sure that they make enough to be filing taxes. Should they still be doing that? So there is a limit. I mean, there is an amount of money based on your filing status, like if you're single or head of household or married filing jointly, that is considered the threshold where you're required to file. Which you have, if you have specific questions about that, shoot me an email and we can talk about what income you had if you're required to file going forward then. I always suggest to people also, so as a single person, I'm under 65. I have to file if I made at least $12,950. Now, if I made less than that, I'm not required to file, but I sometimes still suggest it. If you had any federal income taxes withheld from your paycheck throughout the year, you might be able to get all of that back in a refund, and maybe you want your money back. You also might qualify for some of these benefits. I just said single, I use that as an example. I might qualify for the earned income credit, so I might get even more money back. So you're not required to file unless you hit a certain amount of income earned, but you may want to consider still filing because you might get some of these benefits or some of your income back. There was a question about assisting folks claiming a state incentive. If it's claiming something that's a state income tax credit, obviously we file federal, state, and local taxes for people, so they can come to us. We'll make sure they get their state income taxes filed so they can get whatever credits they are due. We only file Pennsylvania. I should say that we're only certified to file Pennsylvania at our site. So if someone lived, I don't know, in Florida and moved to Pennsylvania because they got tired of the warm weather, we can file their state taxes for when they lived here in Pennsylvania. They're still required to file taxes to Florida. We just can't help with that. So they may need to do that on their own, or they can do something online, but we'll definitely take care of the Pennsylvania part of it for them. And then we also, Pennsylvania has local income taxes. If you moved between municipalities, this is actually a thing that I did last year, so I have to file local taxes to 2 different towns now. We can help you do that. I don't know, if Florida has local income taxes, we can't file the local for Florida, whatever municipality you lived in there. That is a thing you would have to take care of, but we'll take care of your Pennsylvania stuff. That's not a problem. A question on how long the appointment takes. It should take about 60 minutes. Sometimes they go a little longer if you forgot to bring a document and you're sitting on your phone trying to pull it up in an email or something. So that's why we recommend you gather everything before you come to the appointment so that you're just ready to go. For our site in Turtle Creek, we also tend to mail you the intake form before your appointment. So there is a form the IRS makes everyone fill out that has lots of questions about demographics, your contact information, your types of income and life situations you had last year. We will try to mail you that a week before your appointment so you have it and you can fill it out before you come to your appointment. That will also save you time. If you have questions, we'll obviously answer those once you get to your appointment. But if you have everything ready to go, it just makes things go a little smoother. If you schedule an appointment to do the current year of taxes and a previous year of taxes, that it's an hour for each year of taxes. So just make sure you give yourself enough time for that. Yes, a question that all this information will be sent out later this week, either tomorrow or Friday, depending how fast YouTube uploads our video. But you'll get all of this presentation we're doing right now. You'll get that expense tracker and some other pieces of information that will help you. If you are under 25 years old with dependents, do you qualify for earned income tax credit? I think you need to be 25, but I will check on that to be sure. But I think that age bumped back up for everyone, whether you have dependents or not. I will include a note on that, but I'm pretty sure it is the 25. All right, I've got some emails for people, which is great. So thresholds for teenagers to file if they had a summer job. Let me look at my chart really quick. I think it is the same. That same threshold, like if they made over the 12,955. But also if they're, well, yeah, if they've made that much, then they're required to. But again, they might want to still file and get their money back, especially if they're working part-time and don't have a lot of other income. I don't know how much income off the top of my head gets withheld during a summer, but they may want that back. If we bought a house, what do we need to do? So a few things to think about depending how you bought your house. If you have a retirement account and you used some of that money to buy a house, because you can sometimes pull money out of your retirement to do that, be aware that you're probably going to get a tax form that shows how much money you pulled out, and that is considered taxable income for the year. So be aware that that is a thing. There are some other credits that you can get if you bought like energy saving appliances for your new house. We can do some of those credits. You'll need to bring your receipts for that type of stuff though. And then things like, there's some stuff if you want to itemize your taxes that like mortgage interest and stuff can be tax deductible. But again, if that's your situation, we'll look at all of the things you could itemize and deduct and help you figure out what you get more money from, taking your itemized or your standard deduction. What if you work for a school and only work half of the year? Do you still qualify for the child credit? I'm not sure if that means the child tax credit or the child independent care credit. For child independent care credit, I think you should still be able to get it because it's based on how much you paid out during the year. And child tax credit, as long as you had some earned income of over $2,500, you should qualify for that one also. All right, I think I got all the questions that were in the chat. If not, feel free to let me know and draw attention to something if I missed it. You're welcome to chat. You're welcome to pull yourself off mute and ask questions if you have any. Some of the other ones that were submitted earlier, my child is still in college. Can I claim them as a dependent? Yes, you can. If they're a full-time student in college, you can claim them. The IRS considers them having lived with you for the full year. Like that's one of the things. There's like a residency requirement if someone's your dependent, and being at college, they consider them still living with you. So yes, you can still claim them for your dependency, for their dependency. The start date that you can file. So technically some of our partners, well, some of our partner sites are open right now. So if you wanted an appointment this week, if they have an open appointment, you could get one with them. If you e-file your own taxes, that opened on the 23rd. So you could go online and get yourself filed this week. If you want to come to Turtle Creek, we open on Tuesday on the 31st. I will give you a warning. If you are claiming the earned income credit or the child tax credit, whether you're filing on your own, you're using a VITA site, they don't process those refunds until the middle of February. So, and then like we always suggest that people wait at least 2 weeks to get your direct deposit if you did an e-file. So even if you file your taxes this week, if you claim one of those credits, your refund may not get to you until March. That's not a rule that we just come up with at our site. Like that's an IRS thing. They're not allowed to issue that refund until, like, start processing those until middle of February. If you don't claim that at all, yours would get processed pretty quickly, hopefully, and then you would get your refund direct deposited within 2 weeks.